folks, I'm going to tell you 5 quick facts about black bull markets. Now, did you know, number 1, they're New Zealand FMA regulated. Number 2, did you know they have a copy trading service where you can either be a signal provider or copy signals? And number 3, did you know they've got over 26,000 tradable assets, including Forex, crypto, stocks, indices, and even more? And number 4, did you know they offer 500 to 1 leverage? And number 5, if you open up an account today and trade 1 lot a month, they're going to give you TradingView Pro for free. Check them out, Black Bull Markets.
And we are live. Good morning, good morning, good morning. It's a happy morning today. Happy to be back at it. So, as you know, we're going to be trading gold this morning, or probably USD JPY as well if we find a trade. So, first off, let's go ahead and, as it's the beginning of the month, let's go ahead and see what gold is doing for this month, or what it might do the near future for the rest of the month. So we're gonna go ahead and see what's the monthly, weekly, daily time frame saying, what's the narrative behind the movements that we have in gold. So first off, we can mark our high for the previous month, which was 1987.530, and also we can mark the previous month low, which was 1902.745. Those two are liquidity points, and they are potential targets for price. If price is bullish, it will tend to go take out this. If price is bearish, it will take the low. And if price is consolidating during August, it'll just be in between the range of this previous month. As for where we are in the monthly chart, as we can see here, in May, we made an equal high, which makes us having 3 equal highs here. One in August 2020, one in March 2022, and this equal high here in May 2023. So we definitely have a lot of liquidity residing above those highs here on the monthly time frame, which might give us a long bias on the for the end of the year, but we can still see a drop below, as well as we can see here December 2022 and November 2022 created a gap here that was draw into but not completely filled here. So we might we can definitely see a push down or a push up here to those equal highs there. And this one here is our monthly fair value gap. Say measure. It's not visible here. Change that to red. Okay. And as for where we at on the monthly time frame, we can put our fib from this low to this high here. And we can see that currently this is equilibrium and this is the premium and a discount. We are currently in a premium. I mean, if market wants to sell, that's the best position for the market to sell and go down there in this fair value gap as it's in a discount. So we're currently in a premium. If the market wants to sell, that's the best place for it to sell on the monthly. And we currently have a bullish order block here. And we could have seen here a reaction to it on June and July. Both candles went into it and closed right in it in the first 25% of the down close candle here. So we might see a third reaction or a breakthrough here to go to the this monthly fair value gap that was created in December last year. So that's it, I believe, in the most recent time here on the monthly chart. We have those levels that we can look for. So we're gonna go down to the weekly chart. And today, this morning, we're gonna have a little news in USD here. We have an FOMC member, Harker, that is speaking. So that might create some movement or not in the market. And on the weekly time frame here, we're gonna see our levels. Those were the monthly highs and monthly low. I mean, monthly July high and July low here. And we had our monthly equal highs at the top and the monthly fair value gap here. And as you can see here, we had a fair value gap in this weekly candle, down close candle here. We had a fair value gap in this weekly candle after we had this fair value gap, and we also had this breaker here. As you can see, price did a push down here and immediately pushed back up, going higher than the previous leg, so which qualifies this as a breaker that we could mark out here. Let's see, let's take That's the high comes in at 2015, 0.75. And that's the eye of the breaker, and we also have the low of the breaker. Yeah, the low comes in at 1969, 305. 1969, 305. So as you can see there, we had a nice reaction inside this breaker and fair value gap. I mean, when we have multiple PD arrays that's inside each order or that adds together, we usually have pretty beautiful reaction. Like we have this breaker, and inside this breaker we have the fair value gap. We can see how price rejected the fair value gap and the breaker as well, and it's pushing down right now on the weekly time frame. And on the weekly time frame, we currently have a big, what ICT call BC, buy side imbalance and sell side inefficiency. As we can see, that there was a big push up here, price leave a big gap and an imbalance here, and we had it almost fully filled, but we still have room left here. So that can be considered as liquidity here. I believe that was June's low. Yes, that's the lowest point in June. So let's mark that out as well. I mean, we didn't mark June high. I believe June high might not be that interesting to mark. It's in there. June low here. So that's definitely a point of liquidity to consider here, as price is dropping down inside this BC buy side imbalance and sell side liquidity. Sell side, sorry, not liquidity, sell side inefficiency. Sorry. And on the monthly, on the sorry, well, on the weekly, we have this fair value gap. This was the monthly fair value gap. And on the weekly here, we have this down close candle here. See the close coming at 1810.985. Sorry, that'd be the open. 1842.56.5. Well, I have to say that this is definitely the most, I mean, not the most boring part about trading. I mean, that's what I usually do on the weekend, but I decided to leave that for today, as I was going to be live so that I can do it with you and you can see how I mock up my charts personally. Cecile said, lovely. Thank you, Cecile. So that's how I personally mark up my chart, and I can see those level as I'm going down in time frames and refer to them as prices reacting to them. Just like ICT shows, and they are very helpful when you know this reaction is due to this video ray on the higher time frame. You know what's going on in price and what it might do, where it might go after that. So this close comes in at 1810 1985. That's the open 1842 6565. I take the time to really see the exact levels here. Like for example, this the open of this candle was 1842 565, because when as you are going down in time frames, they might go inaccurate if you don't do it like this. I usually like when you are on the candle at the top here, it will show you the open, high, low, and close. So you can see there this candle opened at 1842 565. So I just mark up this level here, and this was, say, bullish, a weekly. So besides this whole range here, I don't want to go more below this monthly fair value gap. So we're just looking at PO raise inside this range. When you're marking up your charts, there's no need. I mean, if you already marked higher levels on the monthly, like there's no need to go down those levels. You just like you mark the monthly, and the weekly will be levels inside the monthly levels, and the daily would be levels inside the weekly levels, and so on as you're going down. No need to go up there or below there, like for those weekly levels, just inside the monthly levels. So if we're looking, like for example, as I said earlier, those reactions happen and you can see them. Like for example, as soon as this price leg comes into the breaker, it reacts, it rejected. And at this point, when you see the first rejection, the second rejection, and let's say the second rejection, you have a pretty big idea of where price is going to go, because you see that two rejections candle didn't even close inside the breaker, and the first rejection was higher into a fair value gap, and you have this BC here, buy side imbalance and sell side inefficiencies, and you immediately know that price is going to go there. That's your target. So if you're taking a trade, a short trade here, that's gonna be your target, definitely. So that's easy. You could swing trade that or intraday trade that, or no matter how you want to trade it. If you're trading the weekly time frame, that's a beautiful trade. You see here, from here, let's say here to, that's a lot of money, definitely. So I believe we are pretty much done on the weekly time frame. We had this higher events here. That's a BC. So beside this weekly order block, this PC here, we don't have um, pretty much any other video weekly time frame here. So let's go down to the daily. So as we're going down, we are trying to get to be as close to current price as we can. So we are only looking at PD areas that price, not the ones that are further. So here, as we can see, this was our weekly BC, and we can see those reaction clearly. So as of now, we can see our clear targets are the July low. I mean, before that, we have this low that formed in August 4th last week. That's a daily target. And after that, well, I would say that's pretty much it on the daily time frame. We pretty much have the same levels as targets. So let's go down. So let's see for this week how the market is going for today specifically. Yesterday I did not trade gold. The market was a little bit bumpy for me. I mean, even though it looks clean here, but as I was looking at it, it was definitely different. I mean, looking afterwards and looking at the current price is two different things. You have to experience live market. So for today, for this week, I mean, that was last week. No, that was Monday and then Tuesday. Monday, yesterday, and today. As we can see here, price is going down, and our most recent level here is this low here that we want to see reached into. Let me know if you're there with me in the chat. Let me know where you're listening from, where you tuning in from. I'm currently in the Caribbean, Dominican Republic. So let me know where you are, where you at right now, and how is it going for you in trading. So on the 1 hour, we would be interested to see what's the reaction at the consistent encroachment of this week, which is definitely here. So it's already touched it, but we would like, I mean, to see it close below it for a movement lower immediately right now. So if it closed below that, we could expect more movement lower toward this target here. Let's go down to the 15-minute time frame, and as we see, we are currently inside this weekly PC and at this week consistent encroachment previous week, and here price is doing lower highs and lower low. As we can see, that was a beautiful trade this morning at 7:15. We had a higher high and a high and a lower high break in market structure here and a fair value gap, beautiful, and then it reached into the fair value gap and dropped. So we're currently here in the market. We have a CB here, fair value gap here on the 15 minutes. One moment, let me pull up my EdCadet account. Sorry, my Blue Guardian account here. Let's get ready for a trade if we get one. Okay, we have this 15-minute fair value gap here. We have already taken out the sell side liquidity here below London low at 345. We have some liquidity up there, but I don't believe we'll go up there as we have seen already on the higher time frame here that we are going down. So I don't believe we're gonna go up there. And we have Sebatletlo. I don't know if I pronounced that right. It is from South Africa for monthly trading, and I'm still studying ICT material. That's great. That's great. Happy to be here with you, and definitely take your time. Don't rush it. I'm 2 years in, and I'm still studying, so it's a constant study. It's like, as you said often, it's like you were in college, like a 4-year program. So there's always room for improvement, always room to get better. Okay, let's drop a little bit lower. Let's see here. So we definitely only have this consistent encroachment here as first target to be closed below, and then we have this low here to be reached into. And then let's see on the 5 minutes what the chart looks like. Okay, definitely trying to close below this consistent encroachment. Beautiful, beautiful. We're definitely trying to reach that target. So inside this 15-minute fair value gap, we have multiple 5-minute fair value gaps. We have this first one, this second one here, where the break of structure, the market structure shift happened here. So, and if we're looking closer, we also have an inversion fair value gap in here. That's an inversion fair value gap that was here. And let's see here. The high of this candles comes in at 1931 0.25, and the high of this candle comes in at 1931 0.65. What platform is that? That's TradingView. That's what I use for charting, and I use MT5 for trading, as most brokers use MT5, but for charting I use TradingView. You can go to tradingview.com, and it's normally free. You can do most of the thing for free, but some features um, you might need to update your plan, like to a paid plan. But the free version is well enough for anybody that's starting out in trading, that needs to mark up his chart and see where price is going, what it's doing. It's tradingview.com. Under 1 minute. Mhm. This drop happened at 7:30 exactly. So if I were looking to take a trade on gold this morning, I would say I would have a short position here, my stop loss above here, and see our take profit levels would be here. That's in broad, but I don't believe price will be reaching up to that, so I'm gonna decrease my stop loss to this level here, a little higher than the 15-minute fair value gap above it, and take profit would be this low of the week of August 4th. That's if price wants to go back into the fair value gap, because yesterday night I spent like the whole Asian session for USD JPY to give me a trade, but it just took off at 7:45 around that, and it never came back. I mean, let me show you here, and you can see it was yesterday night. Let's go on the 5 minutes. So 7:45 last night, exactly 7:45. See there, 19:45 exactly at 7:45 Eastern time. Price took off. Normally, I start looking to take a trade after 8, which would be here. I mean, I was seeing this movement here, but usually what price does in Asian session with USD JPY that I've been trading, it's like anything that it does in before 8, it go back down to take it out. Like for example, those lows that created when it entered this fair value gap at 1945, it usually would come down there, take out those low, or revisit this fair value gap. So I was expecting that, and it didn't give me anything at all, no retracement, as you can see, just movement up. And there I had that you could call ICT silver bullet, but I don't like to take trades that high in a range. Like for example, if you can see here, from this low to this high, the retracement was only a 25% retracement. And at this point, I believe we had already take out yesterday's high. So it was very, very high for me. And I don't like to take trades like that. Usually when you have that much gap in prices, that indicates it wants to go higher, but at the same time, you never know. It can go back and fill any of the gaps. So I would have to use a stop loss. For example, here we have a little down close candle in this push up. So price might go back down if it wants to. So I don't like to take trades that high in ranges. So I didn't take that one. We have a second a little retracement here into a fair value gap again. I didn't take it because, I mean, my target was yesterday high and the previous day high, and it took out those target pretty fast. So I wasn't expecting that much movement that fast and without any retracement on USD JPY. So why I didn't take any trade at all. So if we are checking here, I was estimating the daily range to be around 150 pips. So that's 97, 97. So that would be a beautiful, beautiful trade to catch if you were trading before 20. Unfortunately, I only look to take trades after 20. I might change my mind because recently I've been seeing a lot of great moves at 1945, 7:45 Eastern time. So I might change a little bit and see go into the church early onto the chart earlier at 7:30 to see if we can catch some move, because that's what we're doing. We're trading. And as I was saying, we didn't even have a little retracement before reaching it to our target, which was this previous day. It was August 4th low. I believe that was NFP that created that low. And we didn't even have a retracement before going that low. So I was expecting here to see a little retracement and then drop. That would have been a beautiful trade, but nothing at all. It just kept dropping without any retracement. As you can see, it offers a little entry here at 803, but uh, this trade wouldn't satisfy me. I mean, this wouldn't be a trade I would be interested in personally, um, because I like to take trades in discounts in ranges. Like for example, if we have a range, I like to see price. I mean, that's one thing about me as a trader. I mean, as each person as a trader is different. I cannot capitalize on big moves. Like if price just took off and never get back, never retrace, I'm not gonna make any money. I make money when price is going slowly, because when price is going hard, like I mean going up or going down hard, it's hard for me to just jump in and, you know, like go take a buy or take a sell, because I'm always afraid that price might do some big push back and take me out or put me in a big drawdown, depends. So I really don't like to take trades when price is not retracing. I prefer my retracement, and it's easier like that. I mean, it gives me more confidence. I mean, some people might be able to trade like big moves, big runs, but that's not me. And fortunately, I'm okay with that. So as you can see here, price didn't give any retracement at all. Just as you can see, from 7:30 to 8:10, we only had down close candle all the way. That's a sign that price wants to go to a target very fast, and the target is drawing price down. And besides this low here as a target, let's see on the 15 minute if we have more on the 1 hour. What other targets we have down there? Okay, so the next target here would be the July low. Let's see if in between that we have anything that might be worth seeing here. So in this price leg that happened in July 10th, beginning of July, we had this big push down. So that's a down close candle that we are currently in price here. But I don't believe this is strong enough to retain to keep price above this July low, but we'll see. But we're currently inside this down close candle here that priced it before going up. So as you can see here, price already showed its willingness to go up here. I mean, closing out of the big, I believe that was a week. Yes, that was our weekly BC, and then it goes down. And as I said, I love retracements. If you see that trade, that's a beautiful trade. I mean, that's equilibrium, that's 50%. It most likely would have gone down to the 0.62 level here, and that's a beautiful, magnificent trade. And do you see the movement here? It even reached to -1 standard deviation. Okay. So that would have been a beautiful trade. I like those trade. Like price show is move, show what it wants to do, and then it will trace to allow other traders to enter the market at a better price. It just beautiful. Here you enter and big move. Capitalize on that trade, a lot of money. So yeah, that's what we're looking at currently. The July, those targets are July low and June low, both currently being targeted. And we can consider this candle, this down close candle low as well as a target for gold. That would be the low comes in at 1912,750. 1912,750. Okay, and then let's go back and see where we at here. So we are inside this PC. So we're gonna see if we have any retracements to take a trade that will allow us to take a trade or not. As you can see, we might be reacting of this. or not. So we'll just wait and see. Our range right now for this would be like from, I mean, our when I'm trading, I usually have multiple ranges. Like for example, here we have first range that I would define from 5 to now. And I would also have that range from this high here to this low here. So inside those two ranges, we have the first range equilibrium is here, the second range equilibrium is here. So we have this as an overlap between the two equilibrium, between those two ranges. So between 1929, 795 and 1928, 591. So as price already did a lot of push back down, if it wants to retrace, it might not be going high up there as I was expecting it. So it might be just wanting to go here below, I mean, above that high of this candle here, or you might just like touch this fair value gap at the bottom here and go deep down. And James is asking, can you explain a fair value gap and how you identify one in a chart? Definitely. So the principle for fair value gap is first, 3 candles. You cannot have a fair value gap in 2 candles in 1 candles. Fair value gap is created by 3 candles. That's the first principle. We have 3 candles, there's a possibility that we have a fair value gap. So we have, for example, that was 4 a.m. this morning, London session. We have this candle and this candle and this candle. That's 3 candle, 3 up close candle. And let's see, this candle opens at 1930, 540. And you see that when it opens, it makes a wick higher. And then, I mean, it opens here, sorry, it opens here, it goes up, wick up, and then close here. And the second candle here, the wick of the first candle overlap the body of the second candle entirely. And the wick of the third candle, the wick down of the third candle overlap as well the body of the second candle. So when we have 3 candles, the fair value gap usually forms in the second candles. For example, here you can see 1, 2, 3 candle. So if we are looking for a gap here, we can see in the second candle, there is a gap here. It starts at the low of the first candle and finish at the high of the third candle. So fair value gap is between the low of the first candle and the high of the third candle. That creates a price range in the second candle where we don't have any wick at all. That means there's been delivery on one side of the market. Like for example, we only had sell side delivery here and we didn't have any buy side to match it. So as we see that, we consider it as a fair value gap and price tends to get back to them and then continue is right. And we had a first one up there that was when we mark it up our 15-minute fair value gap. You have this swing high here, this down close candle, and this down close candle. So in between those three candles, we have between this swing point here, that's a swing high, lower high, higher high, lower high. So that's a swing point, and this one is a swing point here. And in the fair value gap, we see it's the low of this candle and the high of this candle that we mark up as the 15-minute fair value gap. I don't know if that's clear. The fair value gap, we have three candles. It's formed on the second candle, and its limits are the low of the first candle and the high of the third candle. That's in a sell market. But in a buy market, it would be the inverse. Like for example, it would be three candle and it will be formed by the high of the first candle and the low of the third candle. On the second candle, you'll have this price range where there's no wick at all. So let me show an example on the, see here, for example, on this price leg up, we have one, two, three candles, and we have this week high, this candle high, this week here, and this candle low. So that here, that would be considered a fair value gap. But fair value gap cannot be used by themselves. I mean, you cannot just like you see here, let's say for example, you see here there's a fair value gap and you say, oh, I'm gonna take a trade here because we have a fair value gap. No, that's not how it works. You have to have a story behind the fair value gap. Like for example, if you were following the live since the beginning this morning, you could have seen that I went from the monthly time frame to the 15-minute, and I've marked up a lot of levels. And based on marking up those levels, we have come to the conclusion that there's a high probability that price might want to go lower as it rejected initially, it rejected, if we are on the 15 minutes, it's higher. It rejected first uh here. We were inside weekly or monthly. I don't remember exactly. Monthly fair value, I believe it was a weekly fair value gap. We were inside of a weekly fair value gap that it rejected here. And this fair value gap was inside of a breaker on the weekly, yes, on the weekly time frame. That's the low of the breaker. It also rejected the breaker here. So we are going down. And as we were going down, let me go on a higher time frame so that I can show the narrative behind the movements here. So if we go on the weekly here, okay, so that's how I marked it up. So you see here, that was a weekly fair value gap here, and price come into it and then rejected. And this weekly fair value gap was inside of a breaker. I mean, explaining a breaker is easy, but understanding it is difficult. I mean, if you're not familiar with ICT term and ICT concept, you might want to go take a look into that. But as you can see here, price did a push down here and push up higher. We have a higher high here and then a break lower. So this as the down close candle, the last down close candle in this price leg is considered to be a breaker. I mean, actually explain it's better than me. I understand it, but I might not be able to explain it. So we have the breaker low here that price rejected after rejecting this fair value gap that was inside of it. So we know that price is going down at this point. And as we are looking at our charts lower, we see that we have a BC here, buy side imbalance and sell side inefficiencies. So we're expecting price to go inside of that as it's coming from there. And inside of that, we have multiple levels, like for example, those levels that I've marked out, the July low, the June low, and recently 1912 750 price. Those are levels that we're expecting price to go to as it's rejecting this level up here. So that would be it. So that's why I said now I'm only when I'm on the 15-minute time frame, based on my higher time frame analysis, I'm only considering lower movement. So I'm more focused on taking trade in sell side fair value gap. I mean, those fair value gap that tells me that price might want to go lower instead of taking a trade in a buy side fair value gap. So, so unfortunately, guys, it seems that I have an emergency and I might not be able to stay with you for long this morning. I was wanting to go deeper into the day, like 9:30 open, but unfortunately, it seems that I have an emergency. And as I've already go through the gold charts with you, and you see my bias as short, and you have seen the level that I've marked out, so you can set your expectations for future trading for this session, etc. So I would say for today that will be eight. That was a no trade day. Unfortunately, we didn't have a trade yet, and unfortunately, I have an emergency and I have to go. So hopefully, we can see at a later time. And I hope you enjoyed it and have a great day, everybody. Thank you very much for your time and your participation.